Picture this. You're on TradingView just before New York Open. ES is grinding under yesterday's high, NQ already wicked both sides of the Asian range, and your favourite forex pair is pressing into a clean supply zone. Position size is set. Stop loss box is open. Your cursor hovers over buy. You promised yourself last night. Risk 1R. Stop below structure. No moving it. No adding. No revenge trading. I trade like a professional tomorrow. But your brain did not attend that meeting. You imagine the green P&L, the rush of a big winner, the Discord screenshot, the feeling of finally being one of the real traders. At the same time, cortisol is reminding you of last week's drawdown. Heart rate picks up, hands sweat. Adrenaline makes every little wick look like a threat. So you do what almost every trader does when fight or flight hits. You bump size from 1% to 3%, just this once. To protect yourself, you drag the stop loss closer than your tested rules. Better risk or reward, you tell yourself. You hit buy. Price ticks in your favour. And then does what it always seems to do. One tiny spike down, tags your emotional, too tight stop to the pip, then launches straight to the original target you planned. Red P&L, cortisol, anger, revenge trading wakes up. If I just re-enter with double size, I can make it back. So you smash market buy with no clear level, no clear stop, just pure hope. This time the market doesn't snap back, it trends away. You hold, refuse to accept the loss, slide the stop further and further, delete it once, re-add it later, and finally puke the position at the worst possible spot. And at the end of the day, you say the same thing you've said 100 times. I know what to do. Why can't I just do it? That question is exactly where Mark Douglas starts in The Disciplined Trader. He doesn't treat trading psychology as hype. He treats it as surgery on the belief system that keeps your hand doing the opposite of what your plan says. Most traders never do that surgery. That's why most traders lose money. This is not financial advice. Past patterns, no matter how clean, don't guarantee anything about the future. Risk management is survival, not a promise of profits. But if you stay, we're going to unpack a version of trading psychology that actually works in the real world, the Mark Douglas way, through the story of one trader who rewired his brain around risk. Here's Douglas's first brutal truth. The market has zero power over you. It doesn't know you. It doesn't care about you. It doesn't punish you. It doesn't reward you. It just prints candlesticks. You are the one pressing buttons. Sounds obvious, but watch what happens in your head during a drawdown. You start saying, the market is out to get my stop. They're hunting retail. This pair is manipulated. Of course it spiked exactly where my stop was. You turn a random, probability-based environment into a personal relationship. You make the market your enemy. That's not just bad philosophy. It's dangerous neuroscience. Every time your brain frames a losing trade as an attack, your amygdala lights up, cortisol spikes, your body flips into fight or flight. In that state, the part of your brain that calmly reads order flow, respects your stop loss, and thinks in probabilities goes offline. You literally become less capable of following your rules at the exact moment you most need them. Now add the dopamine problem. Every time you catch a big winner because you removed your stop loss just this once, your brain logs it as ignore the plan, big reward. That's a toxic loop. Your nervous system doesn't care that across hundreds of trades, that behavior will blow your account. It only remembers that one insane high. Douglas's bigger point is that trading's nothing like normal life. In normal life, you grow up in structured environments. Parents, teachers, bosses, laws. External forces reward good behavior and punish bad. You learn to outsource discipline to authority. Then you sit down to trade. Suddenly there is no boss watching you move your stop loss. No teacher saying wrong answer when you revenge trade. Unlimited freedom and unlimited risk, with nobody stopping you from self-destructing. The patterns that help you in society become landmines at the chart. Your brain is wired to avoid pain and protect your ego. So when the market disagrees with your bias, you distort what you see. You hallucinate patterns that confirm your opinion. You call a strong trend overextended because you're afraid to buy it. You ignore your own backtest and stare at the one fib level that makes you feel safe. This is chart pattern. Hallucination. It's not lack of knowledge, it's your belief system desperately defending "I'm a smart trader" against the pain of "I was dead wrong." So you get entry hesitation on the cleanest setups, exit greed on the worst choppy days, stop loss removal whenever you don't want to feel wrong, and overtrading whenever you feel behind. Here's the paradox Douglas loves. The more you care about being right on this trade, the worse you perform across all trades. The more you zoom into 1 minute noise for confirmation, the less structure you see. The tighter you make your stop to improve your risk reward, the more you invite random wicks to take you out. His mission in The Disciplined Trader is to move you from outcome-obsessed thinking to probabilistic, process-driven thinking, where each trade is one of many, and none of them define you. Let's zoom into one pattern that quietly ruins traders: the stop-loss removal spiral. Your long NASDAQ futures. This time you did it right. Higher time frame demand zone, liquidity sweep, confirmation on your execution time frame. 1% risk, stop loss below the wick. Textbook. Price moves up, you're in profit. Dopamine trickles in. You imagine the runner, then a red candle prints, then another. Unrealized P&L shrinks. Your brain starts whispering, "It's just a pullback. Institutions are shaking out weak hands. If I leave the stop here, I'm a weak hand. There's a better level, a little lower. I'll move the stop there. Actually, if I remove it for a second and re-add it under that level, it's smarter risk management." You slide the stop. Maybe you delete it. Your body relaxes for a few seconds. You've avoided the pain of being wrong. And that's when the real pain starts. Price finally reaches where your original stop was. But now you're not a 1R controlled loser. You're a much bigger bleeding position with no clear exit plan. Cortisol spikes. You feel trapped. All you see is flashing red P&L. You might add more to average down. You might hold it into a margin call. Or you might panic close at the low and then watch price rip in your original direction. That whole mess is exactly what Douglas describes. Unfulfilled expectations, emotional pain, perceptual distortion, forced awareness. The market did nothing to you. It simply exposed the beliefs already in your nervous system. Every time you move a stop to avoid pain, you teach your brain that comfort now beats survival later. You don't just lose money, you reinforce a losing identity. Multiply that across hundreds of trades and you get the real reason most traders lose. They're not just bleeding capital, they're training their own nervous systems to fear the one thing they must accept: small, predefined losses with zero drama. Enter Marcus. Marcus is not a genius quant or Wall Street prodigy. He's a regular guy in his mid-30s, 3 screens on his desk, TradingView open, DOM and level 2 on the side, a simple futures and forex list, ES, NQ, gold, USD, GBP USD. The only thing special about Marcus is this: he finally got sick enough of his own nonsense that he became obsessed with risk. He used to be the classic, over-leveraged day trader. Martingale on gold, weekend crypto swings with no stop, 3 prop firms blown in a year, late-night Discord rants about algos hunting my stops. He had read Trading in the Zone, highlighted the quotes, but kept trading like a gambler. Then one NFP day, he removed his stop for a second, watched price nuke straight through his level, and wiped out a funded account in minutes. Something broke. Not in the market. In him. He picked up The Disciplined Trader as a manual. He saw himself on every page, a kid raised in externally controlled structures, now in a world of complete freedom, with unlimited risk and zero internal controls. He saw the belief, if I'm smart enough, I can force the market to give me what I want as pure ego. He realized he didn't have a market problem. He had a self-trust problem, so he rebuilt his trading identity around one sentence: I am a risk manager who happens to express my view through trades. His desk changed. One screen is now dedicated just to risk. Open positions, percent at risk per trade, daily max loss, current drawdown, and a simple dashboard of his last 100 trades. Win rate, average R, max losing streak. His routine changed. Before he opens a chart, he opens his journal. Not a diary, a belief log. He writes, what do I expect from today? Where am I secretly hoping to make it back? Where am I afraid to lose? Then he reads 3 rules out loud. Every trade has a predefined stop in the system before entry. That stop does not move away from risk. Max 2R loss per day. If hit, I am done. Screens off. I trade only A setups, higher time frame level, liquidity sweep, clear structure, confirmation, no FOMO, no news gambling. He's no longer staring at candlesticks asking, how do I make money today? He's asking, how do I protect my identity as a disciplined risk manager today? Evenings are for quick, solution-focused review. He doesn't just replay losers. He highlights the trades where he followed process perfectly, win or lose, and replays those. He mentally rehearses price grinding toward his stop while he sits still. Feeling uncomfortable while following my plan, narrate progress. On his charts, he stripped away clutter. Higher time frame levels, liquidity zones, 1 moving average, and volume. That's it. Fewer distractions, fewer chances to hallucinate patterns. It's not that Marcus never feels fear or greed, it's that he now has a framework to catch them before his hand moves the mouse. To lock this in, he borrowed 4 ideas straight from Douglas-style thinking. First, he redefined a good trade. A good trade is not one that wins. A good trade is sized correctly, taken at a planned level, with a predefined stop and target, executed without hesitation, and managed according to plan. If he does that and loses 1R, that's a perfect trade. Second, he made risk acceptance a ritual. Before he clicks buy or sell, he pauses and says, if this stop is hit, I lose 1R. That money is already gone. Can I accept that right now? If the answer is no, if he secretly plans to move the stop, he doesn't take the trade. You must be genuinely willing to lose on any trade, or you'll sabotage it the moment it goes against you. Third, he writes simple what-if scripts, so he's never shocked. His pre-market notes read like, if ES breaks above yesterday's high on strong volume and holds, I look for longs on pullbacks. If it fakes above and closes back inside, I look for shorts into the range. If it chops in the middle, I reduce size or don't trade. Whatever the market does, his brain has seen that script. Less panic, less forcing trades. Fourth, he weaponizes journaling against his own lies. Anytime he breaks a rule, he writes, what was I feeling? What story did my brain tell to justify it? What was the cost in R? How will I handle this feeling next time? Over weeks, patterns jump out. FOMO entries after missed moves. Revenge trades after a full R loss. Overtrading on quiet days because boredom feels worse than small losses. He realizes another paradox. He's more afraid of boredom than of losing money. So he sets a hard cap on trades per session and adds, did nothing as planned, as a win in his journal. Around all of this, he changes his environment. No social media during trading hours. P&L hidden during the session, so dopamine and cortisol aren't spiking with every tick. Only 2 timeframes per instrument. 1 for bias, 1 for execution. To avoid timeframe hopping himself into confusion. Fast forward 6 months. Marcus still has losing days. He still has drawdowns. Most traders lose money. That fact hasn't changed. Nothing in his process guarantees profits in the future. But his relationship with trading is different. He sits down before London Open, coffee on the desk, heartbeat steady. He marks levels, writes his what-ifs, reviews yesterday's notes. There is no rush to make it back, because no single day defines him anymore. His identity is not profitable or losing. It's disciplined risk manager who plays a probability game. When the first setup comes, he doesn't zoom from 1 minute to 15 minute in a panic loop. He checks his checklist, trend, level, liquidity, confirmation, risk. If it's there, he clicks. If it's not, he waits. When price moves toward his stop, his body still tightens, but now he has reps. He breathes. He watches. If the stop hits, he books a clean 1R loss, screenshots the trade, logs it, and moves on. No revenge, no doubling size to get it back. His dopamine is tied to following his plan, not to winning every tick. When he catches a big runner, 3, 4, 5R, he smiles, logs it, and keeps size the same. One trade didn't make him a genius. It was just one outcome in a long series. His equity curve isn't a straight line up, but the disaster spikes down are gone. The deep, account-killing drawdowns have been replaced by shallow, controlled ones his psyche can handle. He's built the one edge that survives every regime, the ability to execute his plan, regardless of how his last trade ended. And that's the essence of trading psychology that actually works. It's not waking up and yelling affirmations in the mirror. It's not forcing yourself to be fearless. It's quietly, ruthlessly aligning your beliefs, your environment, and your daily routines with reality. You cannot control the market. You can only control how consistently you take well-defined risks in a world of random outcomes. So here's your challenge. Don't just nod along and highlight quotes. Tonight, write down the last 3 times you broke your rules. Moved to stop, sized up emotionally, overtraded. Ask yourself, what belief was I defending in that moment? What pain was I trying not to feel? Then steal from markers. Rewrite your identity as a trader around risk. Create one small ritual that locks in risk acceptance before each entry. Build one simple rule your future self will thank you for. Like, I never move a stop away from risk. And tomorrow, when your cursor is hovering over that stop-loss box and your brain is whispering, just this once, remember, the market isn't testing you. Your own discipline is. And in this game, where most traders lose money, and very few ever develop true self-control, the trader who masters their own mind in the boring, repetitive, Mark Douglas way is the one with the only edge that really lasts.